Good evening, everyone. This is Peter Yusuf, Senior Analyst at IronFX, giving you a small preview for the week ahead. With the G20 meeting in Argentina ending tomorrow, its repercussions are expected to affect the markets well in the next week. Starting with the US, the dollar fundamentals could include any further developments in the US-Sino trade relationships in the coming week, as during the G20 meeting, US President Trump and Chinese President Xi will be having a meeting. Should there be no positive outcome from the meeting of the two leaders, we could see the US administration implementing threats of additional tariffs on Chinese imports. Such a development could increase risk aversion, possibly strengthening the US dollar and its role as a safe haven. Also bear in mind that US may be enacting tariffs on foreign cars, practically increasing trade tensions with the EU and Japan. US President Trump is also expected to meet the leaders of Germany and Japan during the G20 summit, and we could see some developments on that front as well. Also, as the Fed's future intentions about its rate hike path rattled the markets in the week we are leaving behind, we could see increased interest surrounding Jerome Powell's testimony before Congress on Thursday. On the financial releases front, the star of the week for the USD could be the release of the US employment report for November. With the average earnings growth rate and the unemployment rate currently forecasted to remain unchanged at plus 3.1% year-on-year and 3.7% respectively, a possible drop of the NFP figure could blur the picture of an otherwise tight US labor market. Other financial releases of interest for the US dollar could be the ISM manufacturing and non-manufacturing PMIs for November, the factory orders growth rate for October, and the preliminary release of the University of Michigan consumer sentiment for December. Across the Atlantic, the euro could fundamentally be affected by the pre-mentioned possible US tariffs on car imports, as well as any further developments of the Italian budget issue. Financial releases of interest for the common currency could be the final releases of Germany's, France's, and Eurozone's PMIs for November, which are expected to confirm the lukewarm readings of the respective preliminary releases. Also, Germany's industrial orders growth rate for October and Eurozone's second release of the GDP could steer interest of Euro traders. On the other side of the channel, the UK continues to be in a political chaos regarding Brexit, and as the UK Parliament's approval date, that being the 11th of December, draws near, we could see Brexit headlines continuing to reel in, and the pound may be under pressure as uncertainty is to continue. On the financial releases side, however, the pound may be getting some support as November's PMIs are due out this week and are forecasted to pick up, with the exception of the construction PMI. Moving on to Australia, RBA's interest rate decision is expected to be the center point for Aussie traders in the coming week. With the AUD currently implying a possibility of over 99% for the bank to remain on hold at plus 1.50%, market focus could turn to the accompanying statement, scrutinizing the document for the bank's future intentions. However, RBA's interest rate decision is not the only financial release affecting the Aussie. The market is expected to be interested also in the release of the GDP growth rate for Q3, the retail sales growth rate, and trade balance figure for October. Another bank which will be releasing its interest rate decision will be the Bank of Canada. The bank is expected to remain on hold at plus 1.75%, and currently cut OIS imply a probability of nearly 90% for such a scenario. Also from Canada in the coming week, we get the employment data for November. Please be advised that during the G20 meeting, the US, Mexico, and Canada are to sign the USMCA agreement, which is to replace the previous NAFTA agreement. We could see reactions extend well into Monday affecting the loonie. Last but not least, we would like to mention that OPEC plus Russia will be meeting in Vienna in the coming week. Oil-producing members seem eager to take action as oil prices have dropped more than 30% in almost 2 months. Our base case scenario is for the meeting to result in possible oil production cuts in order to stop a possible oversupply of the market. Currently, analysts seem to be estimating the possible cut to reach 1.4, maybe 1.5 million barrels per day. Should the expected cuts to be announced convince the market that they will rebalance the oil market and tighten it, we could see oil prices stabilizing, maybe even rising. Also, please be advised that there is a possibility for volatility to reach the oil market before OPEC's meeting, as Saudi Arabia and Russia are to have a meeting during the G20 summit. For more information and trading ideas, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circulars on Google+. This is Peter Ilse from IronFX wishing you solid trading.